to Punch Card Investing, a weekly show dedicated to all things value investing. Whether it be analyzing companies, pitching ideas, or discussing moves by the best investors in the world, we're trying to get one step closer to punching an investment off of our cards. Let's get started.
Thank you, intro man. He's always as stable and as productive as ever. It's always amazing, and it's an amazing intro every time he's on. So we always appreciate him for his service. Patrick, it's good to have you back on. I know it's been some weeks since we've been together, but it's time to talk about moats. And I know this was actually a topic that you suggested some time ago, so we're kind of saving it for an episode where you can join. So good to have you on for this one. But before we get into that, just a reminder for everyone to like, comment, subscribe, all that great stuff. It goes a long way towards helping the channel, especially subscribing so you don't miss future episodes, whether they be our live show or some of the new shows that we've been rolling out, like Contrarian Corner and Firm Discussions. Both of those shows more get into individual company analysis. So if you're interested in that and potentially getting more ideas for stock analysis, then definitely check those out. Otherwise, I think it's about time we get into some moats. Patrick, how have you been?
I'm okay. I've been my immune system has been put to the test since we started daycare, so I'm a little under the weather right now, but we'll get through it. So,
and is your the immune system kind of is a great analogy for a moat, if I do say so myself. It's your first line of defense.
Yeah.
Sorry.
No, yeah. So, just as far as moats go, you want to start with the definition? Do you have something or?
Yeah, a succinct definition, see if I can come up with one. But I always think of it as a company's ability to withstand competition. And kind of as a subset of that, is it easily mimicked or copied? And if it's not, or there's some sort of barrier that would prevent someone from copying it, then that would be considered a moat. And a moat could be brand value, could be just legal barriers. We could certainly talk about maybe low cost provider moats as well. That can be
I want to get into that
moat as well. That's kind of how I think about it. Do you think about it in a different way, or have something else I missed?
I think as simple as possible, it's just a sustainable competitive advantage. What protects you from competitors is the way I think about it. If you listen to Buffett and Munger talk about moats, they stay in the metaphorical term for actually like most of their discussion. Warren Buffett will start talking about the castle and the lord of the castle, and then he just gets into anyway. So what I wanted to do was go more into like the true business, I guess, definitions of what the moat looks like. So
like specific examples? We
can do examples, but I'll go through some. But I think one other thing that's neat about moats is that it's something that you have to be I guess scared of, or if you're somebody like me who loves the magic formula stocks, right? Because one of the things that defines a magic formula stock is a stock that earns a high return on invested capital. And so anything that earns a high return on invested capital is going to attract a lot of competitors, right? So,
sure. High margins in general. If something's really profitable, typically means there's meat on the bone for someone else too. But yeah.
Yeah, exactly. And it's kind of a paradox, because if you can, if you're sometimes people don't want to enter businesses that look like they're earning a low return on invested capital. So, do those have better moats? I guess not. But then who wants to invest in that, So.
Right.
But anyway, I thought I want to give kind of a general way that I think about the moats, and then we can go through some specific companies.
Sure, yeah, go ahead.
So, if I'm thinking of it, I think there's two parts. There's the barrier to entry, which is like what's preventing somebody else from just starting up a company in this industry. And one of the biggest things is like just high absolute capital. So even though you can say like somebody like Amazon or Google earns a high return on invested capital, you're not going to come up with hundreds of billions of dollars to start something on their scale to compete. You know what I mean? That's
Sure.
and so another barrier to entry, I think, are really just asset heavy businesses. So I think of like manufacturing, which is what I work in, and then anything involving government regulations. I mean, think about how hard it would be to make to make your own pharmaceutical company. Let's say you had some new idea. You don't just that's not just something that you can jump into, right? There's a lot of government regulation there. It's the same in my industry in manufacturing. There's a lot of environmental regulations and stuff that you just have to get through, and it takes time.
Sure. I think kind of before that though, you were talking more about the asset heavy, like very heavy businesses. Maybe that moat would sort of be, I don't want to call it economies of scale, but that kind of goes to the low cost provider model, perhaps, where someone has just so much invested into their current systems that the only way we could possibly beat them on price would be to have the same gigantic system or network already set up, and that's
Yeah,
very as we get to. So is it even worth it? Um, I maybe is economies of scale considered a moat? It kind of is.
yeah, that sounds like some. Yeah, I I guess I don't use the I guess that's like the economic language or something. But yes, being bigger is
Yeah,
helpful because you spread out your fixed costs, and that definitely comes into play for part two, I guess. So the first one, like I said, can you even start this company? Like, what barriers are there to help to have you start it? And then to me, the second layer of a moat is all about the customer. Like, how do you get the customer? Let's say that you could make an identical product. How do you get the customer to pick yours over somebody else's, right?
right.
And the first one is low cost producer. And I think that gets thrown around a lot, but I don't really hear people go into what makes a low cost producer. So you kind of touched on it. Like one way is to just be huge to where your fixed costs are spread out and you're way more efficient. You can share best practices, that sort of thing. I think a lot of companies do that.
That's probably the easiest one to point at, just because it's huge. It's right in front of you.
Yeah,
Um,
I'll tell you another one. Is I guess vertical integration. So being integrated back down as far down the raw
sure.
material chain as you can be. So, for example, I talked about fertilizer companies last time I was on, and there was one fertilizer company I was looking at, and they weren't doing as well, and it I was curious why, and then I was talking to somebody about it, and they said, look, the reason is that they're not integrated all the way back to natural gas like everybody else. Everybody else who makes ammonia is usually integrated back to, or who makes fertilizers is somewhere integrated back to natural gas, but these people were only integrated back to ammonia. So it just that one step was a huge difference in economic performance because they couldn't pass that cost on as well as the other people. So that integration, I think, is really key to being a low cost producer. And then the other thing is just location. Like sometimes proximity to raw materials and things like that make a big difference, or proximity to customers. You're just going to have much lower shipping costs, and that will automatically make you a low cost producer, right?
Yeah, when it comes to vertical integration, I mean, the one that always comes to mind is like a Standard Oil type thing. This is an old example, but where you have a lot of access to the natural resource that you need that is hard to replicate or substitute. So in their case, it was
Hmm.
oil, and then they kind of went up the whole chain from there. And it created, and combined with that, you had a lot of cost advantages too, because they could control the entire supply chain, and not have to pay middlemen, at least as much. So that's a nice advantage to have. And
Hmm.
when in the resource space, of course, if there's only so many of a there's only so much of a particular type of natural resource to go around. So if you can control a lot of it, that's going to be a moat of some sort. Not to
Yep.
say that substitutes can't come up or new discoveries can't be made, but kind of on that same note, having some sort of control of the actual natural resource or land in an area is going to be a big advantage.
Mm-hmm.
So it does kind of depend on the industry, of course, and what the product really is.
Yeah, can you highlight the comment that just came in? Because I think that also adds to it what you were talking about. Because this is what you just said, that, like, being big helps with the fixed costs, but he's saying, it also helps negotiation and variable costs, and that's 100% too. If you can throw your weight around.
I think it kind of depends, because at the same time, like, yeah, I think a lot of the time that's true, but when a company becomes so big, it can become very inefficient, and it's like an aircraft carrier trying to turn. That's where there might be opportunity for a bunch of smaller, more nimble players to come in and take a share. But yeah, certainly a lot of the time, yes, they'll have a ton of negotiating leverage, and then allow them to get stuff even cheaper because they have volume.
Yeah. So moving on, I guess I got really just one more big thing for customer preference.
Yeah.
And that's quality, and not as much, like, I'm not talking about your purity versus somebody else. It's more the risk you pose to the customer's quality. So I'll give you a business example and then a personal example, because we'll get into that, but
sure.
So like, business wise, I used to work for this one company, and we pretty much had no competition in, I guess, the Western Hemisphere. Like, everything was either in China or India that was a competitor. And I asked the CEO, like, one day, I was like, why don't we have any competition? Because and he gave me kind of the big scale argument that I talked about with the, it's hard to make chemicals, you need this. But then he said that the real reason is that our product is such a small percentage of the customer's needs, but it impacts their entire product quality. So it might be a fraction of a percentage of what goes into the customer's final product, but it has such a huge impact that to them, they're not going to risk going with anybody else, if that makes sense, because they'd be saving fractions of a percentage just to that, and then be jeopardizing their whole thing. And that's a big one. I think from a personal consumption level, and personal consumption is a great way to judge moats. I mean, think about your favorite businesses. That's a great way to look at a moat. Usually they're super expensive. If I think of things like, where do I spend most of my time and money? It's those questions. Time would be free time, probably be Google, YouTube,
Right.
and then money's pretty much our money goes to Costco or Amazon.
Yeah,
It's not. So anyway, but those are expensive too. But a personal consumption story is like, okay, if you go get a drug for yourself from CVS or Walgreens, do you get the generic or the normal brand? Or do you if you're going to go get Tylenol, do you get Tylenol, or do you get, great value acetaminophen or something like that?
Yeah, if it's the same exact, the few times I would do that, I'd look at the ingredients on both, and if they're the exact same, it's generics for sure. But
yeah, 100 times out of 100, I always did that for myself. I'd get, it's like 50% cheaper, or like,
right.
It's crazy. Well, look, and this is so weird, and it's an example of an irrational consumer. But the first time we had our baby got sick, I had, my wife's like, go get infant Tylenol at the store, and I'm there, and I see the infant Tylenol, and right next to it, I see, great value Tylenol for infants, and I'm looking and I read the labels, and it's like the exact same.
Yeah, exact same.
And it's like $8 versus $12, and I was like, I'll just go with the normal for this time, And I got the normal, and like, that's not rational. I don't do that for myself, but it was to me, that was a greater risk. So that's a good example of a moat,
I don't think most customers are thinking of it this way, but maybe not on the big company level, but certainly for a smaller company, this might go for commercial customers as well. But if it's a smaller business coming to help you, you might assume, okay, they're not as well insured. They're not necessarily going to stand by something.
Mm-hmm.
Some of the drawbacks of being smaller, you're just not as well capitalized in many cases. And some customers worry about that, maybe not at the drugstore aisle level, but
Mm-hmm.
maybe commercial clients who have a big project going on. Are they going to send their $100,000 bid to the small company, or are they going to go for the big national brand that they know will cover themselves if something goes wrong? That goes kind of back to the size thing, though. Bit of a tangent from what you were getting at, though, on brand value.
No, but I agree with what you said, because it's especially powerful in companies where you're dealing with purchasing people or procurement that is spending somebody else's money, right? If it's not your own money, if it's somebody else's, the biggest thing you want to do is avoid a mistake, right?
Sure, yeah.
So the last thing you're going to do is take risks. Like you're not going to save 10%, so that you can tell your boss, hey, look, I saved 10% on this one expense. If it means that you're more afraid of risking. I mean, can you imagine being the guy that hired the small
the
carpet
budget
cleaning business, and then
right. No, I was going to say that, just like and with my steam cleaning operations, it's we don't really run into it because we have a decent local reputation, but it's certainly a consideration that I'm sure plenty of people make. It's like, okay, we're going to go for the big national chain brands, even if they're more or less expensive, just because there's a big company behind it. At the same time, some people look at it the exact opposite way. They'd rather go for the more flexible, smaller company service as well. But I think it definitely depends on the industry for how much either one of those perspectives affects things. But
yeah.
It can easily play into brand moat value either way, sizing and national or local reputation. Yeah, it's very, very industry specific, though. That's for sure.
Yes.
Yeah, but I was kind of thinking also a little bit back to sort of the natural resource thing. It's not really natural resource, but just land ownership as well. That's kind of a moat in itself. And that could be for like land speculation, or it could be for we own the land that our plant is on, or we own the land that we plan to expand on, or whatever it is.
Yeah.
What'd you say? It was
McDonald's.
Yeah, I was going to mention McDonald's as well. Just like they own all this land, so back to the economies of scale thing, they don't have increasing rent costs necessarily because they own that land, so they are the landlord. And they also have that land that they can sell or leverage against in a pinch. So that's another potential long-term moat builder, is literally owning the land that you're operating on, or that you're planning to build on, or whatever it is. And it's something that I think can be pretty overlooked, just because leases are often capitalized and I think often forgotten. But having actual real estate on the balance sheet, it can be a huge, huge advantage for a variety of reasons, that being just one of them. Not just that they own an asset, but that their costs maybe are controlled, and someone who doesn't own that land isn't going to have that same advantage.
Yeah, you get to depreciate it on paper, and it actually appreciates in real value.
That at least in the rental business, yes.
Yeah.
I'm talking just more generally for businesses that happen to own real estate, whether it is their business or not. But yeah, if it is their business, then yeah, they get that benefit too.
So, speaking of McDonald's, and I'd like to hear what other people think on this too in the comments. Like, do you think that they still have a moat, and if not, what happened to it? Like, do you think that they have the same reputation that they had 20 years ago?
I'm curious how many stores they are at. I saw something. I subscribe to this brand called Charter. I think they're pretty big right now. They're like an email newsletter, but they send these really nice looking charts. And the one I just saw was talking about the like national food chains that expanded or closed the most in the last year. There, I was able to find it. And it shows that.
But they might not be closing because like you said, they own the land. It's not like they have.
Yeah, I don't even see them on this list. That's funny. But the top 10 for fastest growing chains, we have Starbucks, number 1, 429. Crumble Cookie is 363 in second. Jersey Mike's 297. Chipotle 211. They're in fourth. Then Taco Bell, Wingstop, Popeyes, Tropical Smoothie Cafe, Chick-fil-A, and Dutch Bros are the top 10. Though Jersey Mike's, Crumble, and Starbucks are pretty far ahead of the rest. Here, let me see if I can pull this chart up on the show. Yeah, here we go. And the biggest loser is actually Subway. It's lost 571 stores.
Now owned by Jimmy John's or something.
Yeah, or Jersey Mike's is, I mentioned that was in second. I'm a big Jersey Mike's guy. I don't know about you. But
Chipotle. Yeah. Chipotle to me is like the healthy fast food that I don't know. Yeah, it
has the allure.
Still cheap. Yeah. But I mean, do you think McDonald's still has the same reputation moat in people's mind as it did 30 years ago?
I wouldn't think so, but I've never been a McDonald's guy. But at the same time, I wanted to see if they were on this list, but I don't even see them here.
Mm-hmm. Like I said, I don't think that because they own all the land.
Like they shouldn't be going anywhere.
Yeah,
and they're still very
even
cheap.
if their stores not doing well, these other guys, if they're not doing well and they're leasing, then they're going to be closing down and stuff. But the McDonald's,
I wonder how much do they leverage? Do you know if McDonald's leverages their land and their stores? Because that could easily make that not work pretty quickly.
I know that the franchisor now gets he pretty much gets 10% on his money or something like that. It's something.
But I mean the land. I don't
know.
Did they?
No, I don't know.
Yeah,
I don't know that. But that's just an example of to me a moat that is really disintegrated. Because I remember begging my parents on the way home from school whenever I was in elementary school for McDonald's for dinner or something, and we'd probably get it once a week my kid. They're not going to be at McDonald's.
You say that, but they still continue to make money. So
yeah.
So,
but I guess to quote Warren Buffett, there was an image in people's heads of what McDonald's was and I don't know if that's the same as it was 30, 40 years ago.
Revenue has been remarkably consistent for the most part. Let's see here. Need to share the window rather than the tab. But here you go. Here's McDonald's revenue. And pretty consistent besides the big drop in 2020, but a lot of restaurants did not fare well.
Some restaurants did better because of the drive-through, which I thought.
True. Yes, a few, yes. But yeah, but 23 million or 23 billion in revenue yearly. And that is driving, what do we got in free cash flow? Yeah, about call it 5 to 7 billion in free cash flow every year. Pretty stable. Not growing, but and then
but a moat to me is where is it gonna? Is it?
I see
do you think that they've been chipped away? That's all I'm saying.
I don't think so. Mentally, I think so. But I mean, when you look at the numbers, they still seem to be doing all right. And maybe it is because of the land advantage that they have over many others.
Yeah, that's what Louis says.
Long-term debt of 35 billion. Well, and basically no cash, but that doesn't include all the land.
They're just bringing cash flow in all the time. Well, let me ask you this: do you think it's necessary to be a top performing stock for 10 plus years? Let's see.
Do I think what is? Or you kind of cut there?
Do you think a moat is necessary to be a top performing stock for 10 plus years?
For 10 plus,
I'm gonna go somewhere with this. Yeah.
That I really want to say no, but it kind of depends on the company size. Because if they're huge, you probably need a pretty good moat. But if you're, I just look at it this way: the pie is very large in a lot of local markets, and even if it's I'm taking this from my steam cleaning example. Steam cleaning is not a new business; a ton of people do it. There are big players in it too, but you don't have to do that great to take out a pretty decent sized chunk of the pie, just by doing things pretty well. So by that logic, there are a lot of industries where you can get up to probably a couple $100 million or a couple $100 million, even a couple $1 billion, and be doing all right without a really big moat.
Mhm.
Now, how long they last after that, I don't know, and how much can they really grow beyond that? Also, pretty tough. But I think you can have something perform pretty well even without a great moat.
Mhm.
Um,
Well,
but
that's
you probably aren't going to get into like mega billion range though if you're looking for that.
yeah. Well, that's where I want to tie all this because it's so interesting to me to look at the top performing stocks for 10 years, and then I did for 30 years too. And I don't think any of them have moats. But
Hmm.
so like, do you know the top two for the last 10 years, or not the last 10, from 2010 to 2020? What were the top two? If you had to guess, don't look it up. Don't
Yeah, top two stocks.
best
Like,
return from 2010 to 2022
is there a market
overall.
cap limit? Because I'm sure there are some tiny ones that are ridiculous. But
Yeah, they started decent, let's say. Yeah, I don't know,
okay,
probably over 10, probably started over a billion. I don't, yeah.
uh, it's probably not mega cap tech if I had to guess. Um,
One of
and
them's a FANG, one of them's not. Yeah.
it's not Netflix, is it? No.
Yeah, Netflix.
Yeah, Netflix
Netflix
is
was
one.
number one.
No, wow, they're
Like
number
over
one.
40x, from 2010 to 2020. That
Wow.
was whenever they got up to over 700.
Yeah.
Number two is crazy. Number two is Domino's Pizza. They also
Oh
did
yeah.
over 40x in 10 years. That's a
Wow.
compounded that's like 45% per year
Pizzas. That's
for,
selling
for, for
pizzas.
10 years. Bitcoin. He says Bitcoin question mark. Yeah. He got it right at Domino's. Yeah. So like, what kind of moat did Domino's have? Like, I would have never guessed. Like, if you're pitching Domino's to me in 2010, I'm thinking, man, no, you got all these other. What differentiates them with Papa John's or I don't know, I don't
Oh,
eat pizza. My wife eats pizza. I don't eat cheese, so I don't have
okay.
and so I'm asking you, like, what
I,
Domino's,
so I've never
what
been a
makes it
Domino's
better?
fan. But I have a feeling that yeah, but that's a great question because it's pizza. It's like one of the most commoditized things ever,
Hmm.
but or just food really.
And
Um,
I did look this up, so I'm prepared because I was so shocked
but
on
they
this.
have. I'm thinking they have all. When I think Domino's, I think of like the ads as a kid, like the 30 minutes. You've got 30 minutes, or it's free. Um, I'm sure that was a driver. I know they did a rebrand of some sort.
Mhm.
I think in the 2010s, and that's about all I know. But yeah, they just marched along.
Yeah,
Um,
it was, same thing as Netflix, I think,
mhm.
kind of first to market. They were the first to use the, uh, apps, online ordering. They were able to
Uh,
get somebody from get you a pizza in 5 clicks at some that was their goal, like, "Hey, 5 clicks and you can get a pizza to your house," or something, and they were the first people to do that, and that really did make them the most efficient, and then, like, likewise, the low-cost producers, so in a way, they were the moat, or they did have a moat from being the low-cost producer, but
yeah, that I seem to remember that more now because when Ackman bought it, I looked into it a little bit.
Mhm,
He's since sold it, but uh, they have like their own internal delivery system, or at least have, and didn't.
and
And,
that's
and
integration.
before now, everyone
Yeah,
uses things like DoorDash, Uber Eats, and all that, and
yeah,
they didn't need to use that for a while. So yeah, that makes some sense. First mover on digital
yeah.
delivery, if you want to say that.
And
Um,
and and so we'll get to Netflix, but think about the pizza delivery system now. Like, for the longest time, if you wanted food at your house, that, who talked about this? Monish Pabrai talked about this in one of his lectures. It had to be pizza, right? It had, like, you or that was just the staple if you
yeah,
had
true.
friends over and you were going to order something. But so that was a huge moat, for some reason. I don't know why. I guess, I mean, I think about French fries and stuff get soggy and all that, but that was the only one. Well, now with Uber Eats, DoorDash, like you said, you can get anything. And so what is that going to do to the pizza industry? That's think about how much of a market share that's going to take away from them.
Yeah, because now it's available to more people.
Hmm.
Um, those companies have to make money too for that to be sustainable, right? So
Yeah.
that can't go on forever if a lot of them are losing money, the delivery services. Um, But yeah, I know
Remember,
Domino's. I believe Domino's has been hit pretty hard in the last couple of years, probably because of that. So
yeah. Well,
yeah, that's interesting. But
speaking of,
Netflix, though, I don't know if I would count that as kind of the same. Yeah, they're the first mover on.
they were the first to streaming, right?
They
I mean,
were, but at this point, it's like,
well, I'm not saying their moat still exists. I'm
yeah,
saying
right,
that they
right.
had it from 2010 to 2020, being the first to market on.
But I think media is a little bit different, just because you have the intellectual property there that you do have a monopoly on. So you could almost call it the ultimate moat in a lot of ways, because you can't just copy someone's movie legally, at least.
Oh,
So
but I mean the idea of
right, I understand what you're
what
getting
do
at.
you think? Yeah, not the movies itself, but the streaming platform. You know,
Mhm. Yeah, I
Is-
guess. But yeah, I don't know if first mover is.
when did they
Back to your
transition?
initial question on, like, can you have a moat, or do you need a moat to have great returns over 10 plus years? And I think that's a great answer. No, being a first mover will give you a big advantage.
Hmm.
But then how long you can sustain it after that is what I was kind of getting at. Is once you get to a certain size, everyone's going to see that and they're going to be like, oh, well, I can do that too. So you had a good run, but now it's like you're going to be fighting everyone off without a really great moat potentially. Though I think in Netflix's case, they probably have a bit of a stronger one, just because of the massive amount of media assets they have now. Even if some of them are kind of worthless now, they've still built up a big bank of content, which is very hard to do. Back to economies of scale and
Yeah,
large asset bases, they have a big pile of content that's
but
ever growing.
yeah, I don't. I agree. I just see them. They're not the only game in town anymore. They're
Oh no,
probably
they're
still
definitely
the
not.
best, but you look at things like Disney Plus and I
And
guess who's the big
HBO,
eight?
yeah,
Yeah, Amazon Prime,
Apple, Amazon, they are all doing stuff. Amazon
Paramount.
increasingly.
Paramount is the yeah. Got
Yeah.
bad memories about Paramount. Yeah, or I should say Viacom because that's whenever I lost money on them. Yeah, but
Yeah.
yeah, I think that's interesting. Now you're going to be more blown away by this one. Best performing stock for the last 30 years.
That's it's not British American Tobacco. It's one of the tobacco ones, isn't it?
Mm-mm.
Oh no, I think that's further back. Last
Yeah,
30. Yeah, I wouldn't know. What is it?
Monster energy drink.
Oh yeah, I saw a video
What
on that some
like
time
it's
ago.
like how crazy is that? Like I would have never to me and the energy drink market is like I didn't see that as I don't see them as being like the Coca-Cola of that. You know what I mean? Um
Sure.
now it's got me interested though because now I'm thinking you know if Monster I mean it's crazy. Like they think about every single public company they had the greatest return out of anybody for the last 30 years. There was no better place to put your money.
The
And
chart goes back 18 and a half years. Did they go public in '05? Is that when it was? Or is
they
it,
were back in the
so
90s.
so it was all the way back then. They
Yeah.
rebranded a few times, right? Kind of
Yeah.
how they did it.
Yeah.
But yeah, 13,000% return just over the past, what is that? Almost 20 years.
hmm
Wow.
And it's just
And that,
crazy.
what are they up to in market cap terms? They're up to 60 billion market cap, 56 billion or 57 billion enterprise value. And that
and
is, it's on, only 7 million in revenue. And that's
I'm
about,
not saying I'd buy it now.
yeah, it's only a billion, almost a
but
billion and a half
you
in
had
the
to be
last 12
doing
months in
something
free cash
right
flow.
to yeah.
But
Say that again.
about a billion and a half in free cash flow. Here's their free cash flow.
Per year.
Yes.
And their market cap was what?
What was it? 60 billion? Yeah. So yeah, that's a little rich, but even so, even if you halved it, it's still a
Costco and
magnificent
Chipotle
return.
are selling at that too. Yeah. So it's that's crazy to me because I would have viewed energy drinks as a commodity between Red Bull. If you told me to like I didn't follow any of this, but if you told me to pick the what I thought was the best seller, I would have picked Red Bull, you know, and it's just not knowing any better because I feel like that's but now you got all these other ones like Celsius and Luis said, "Too late. I'm all in on Domino's and Monster." I'm reminded of the Charlie Munger quote where he said, that things, this is something that can't go on forever, and things that can't go on forever must end. At some point. So,
Well, you'd think, but
but
they're ultimately just selling water for the most part.
well, that's okay. So speaking of that, think about Monster, their huge return, and Coca-Cola. Like, what do they both have in common? They're both caffeinated drinks. So what we need to do is wait for the next generation of caffeine drinks or something. Like
Or a
the next,
substitute for caffeine, whatever.
yeah,
becomes
some
cool.
something crazy, yeah, and then
Kind
that'll
of
be
like that.
the next one. That's the pattern I'm seeing here.
So whatever probably be something like what's CBD related or something.
Oh, no, that's like the opposite of caffeine. Yeah,
Yeah, no, yeah, but
yeah.
it'll be some like hyper
Mhm.
engineered version of that. I don't know, or
Yeah,
something.
yeah. Well, once that comes out, I you
Jump
heard it
from
here first. Yeah,
Pylon
yeah.
Pylon.
Yeah, it's gonna be the next Coke and the next Monster.
Funny you
It's
mentioned Red Bull though. I was recently in Salzburg for my anniversary, and we were doing like a kind of a mountain tour trip around the city. And Red Bull's headquarters is this like, I got like a quick picture of it here, but it's this like mountain villa thing. Like,
is that like
like
piles of trash on the outside? What is
no,
that?
these are bowls. They look very strange, but
Okay.
that's water right there, and it's this like villa thing. Let's see if I can find a different picture. But um, I had no idea that they were like based there. But
Mhm.
like here's kind of like a side. I don't have
Where
many
where
good
where
pictures.
was it again?
It's right outside of Salzburg, Austria. So like
Oh, wow.
in the mountains, like basically like tucked into the Alps. It was very strange. I had no idea. But it doesn't this look like a weird like mansion museum looking thing?
Oh,
And this is their
that's the
headquarters.
Red Bull headquarters
Yeah,
or
this
Disney
is like
Park? Oh,
right
yeah,
on. It's
look,
right on this mountain road.
there's the Red Bull car in
Like you
there.
could pretty easily miss it because there's a lot of foliage like right in front of it. But it's just so strange. Anyways,
That is strange. Yeah.
bit of a tangent, but I did not expect that as I didn't realize they were headquartered there.
Yeah, so going that yeah, it's weird. That's why I mean the reason we talk about moats, right, is to get an investment edge. And I think that is an interesting question: is do you actually need a moat to be a good investment? Um,
Yeah,
but
that depends on your time frame and the size, I would say.
mhm.
And, but yeah, you
I
can get
think
away with
it's
a lot for a while.
in general. I think it's better to look for undervalued things than things that are going to be everlasting. It's hard; those are just so hard to find. Obviously, if you find it, you want to get it. But going back, so I want to answer a few questions. So uh, there's a question about having the U.S. government as your biggest client. Would it be a moat or a risk? And if you, yeah, okay.
This is a good question. I think about that with government as a client
hmm
for a variety of things.
What what's your I guess intuition?
Well, I think of it. I think of it mostly in the real estate sense because there's a lot of housing voucher programs, like Section
hmm
8 is a big one. Then there's state ones too. On the one hand, it's like they technically have an unlimited pocketbook, so they should pay you. But then, are there going to be delays? Are you able to raise prices 5 years from now? Like, how locked in are you to that? But
hmm
typically, it's probably going to guarantee your income. Um, just because they can print more of it every day. So, but then at the same time, depending on how the contract's termed, uh, you're also fixing it to dollars that they might print away at some point. If we're talking about a real long-term contract, if it's like a 10-year plus contract, um, then you have all this inflation risk built in, perhaps.
hmm
But that's not necessarily just with a U.S. government contract. That could be any dollar-based contract or whatever currency it is. For a long-term contract, inflation risk is going to be a big one. So that's kind of what those are some of the things I think about. Your payments are probably going to be guaranteed. They might be a little slow, and you might be limited in what you can do if you want to pivot in some way. So, yeah,
Yeah, I think my initial reaction is it's good. It is a moat because I don't know if anybody else feels the same way, but there's a lot of inertia in government bodies, right? So
Yes, that's a good way to
once
put it.
you're in and you're settled in, the chance of them changing or you're kind of like you said, it's guarantees your income.
More or
It's
less.
and the chance of them changing to somebody else is probably low. And interestingly, remember how I told you that 2010 to 2020 number three. So it was Netflix one, Domino's two. Number three was this company called MKTX is the ticker. It was some kind of trading platform for government bonds and
Hmm.
things like that. And that's I would say that is an example of a moat where you're not just going to go make a new trading platform for government securities, out of your basement or something like that. So
One thing I will say with government reliance is, uh, certainly for the big companies, it can be kind of a protector, just because, uh, if that company's in bed with the government, it's gonna be like a something for something kind of arrangement, probably, or at least they'd be more likely to get protections later on, or things that would hurt their competition. So from a light corruption standpoint,
that
it's
sounds
pretty
that
good.
sounds illegal. Yeah,
Not quite illegal. Legal.
quid pro.
Yeah, influence peddling, whatever you want to call it. So you
Yeah.
got some of that built in. That's typically only for the big companies. But one thing I'd be actually worried about with that kind of arrangement, where the government's paying a ton of the bills, is just like complacency and what happens when that contract ends, if it ever does. And then it might tend towards a lot of waste. I have some buddies who've worked for government contractors, and just the waste and, just there's no incentive really to try, because you have this locked in contract that you're going to get paid no matter what the quality really is. As sad as that might sound for taxpayers, but for that company, it's both good because you can make this money despite not really necessarily providing like a top quality thing. But if that gravy train ever stops, well, now what? You have all this bloat potentially,
Hmm.
and haven't really been innovating, so that's a risk. Or even if it doesn't do that, it might encourage you not to innovate in some other area, and instead you're just going to focus on this one thing that might be increasingly outdated or whatever. So there is definitely a risk on that side too, but that's the main risk I think of. It's not so much the counterparty risk, but it's the incentive risk of, okay, well, we're locked in, no need to try anymore, and that could be
Yeah.
that could cause a long-term issues, from that kind of complacency.
Hmm.
But that's not really unique to just government reliant businesses. It's kind of any large business that has done well recently. It's very hard not to get complacent.
Yeah. That's kind of the
But good
we
question
touched on that
from,
about the top performers probably not being the top performers going
right,
forward.
right, exactly. But good question from Luis. Um, Yeah, those are interesting examples, and like who the actual top performers are. And it's hard to say they have real big moats, at
Mhm.
least in the sense that we would think. Um, what are
Yeah.
some examples of great moats? We've kind of talked about them at a higher level, but any that come to mind? I think the more famous one that like Buffett talked about is, I'm certainly Apple, with kind of the way it's integrated itself into many people's lives, and how they can't live without their insert whatever device here, mostly the iPhone or whatever it is.
That's true. Have I told you that story with me before about
No, yeah,
Apple?
you might have. Well, what is it?
The I broke my phone at one point, and I was watching too many YouTube shorts or something. So I was like, you know what? I don't need this phone. I'm like, I'm gonna
That's bold.
get a flip phone. So
Ooh,
I actually went and got a Nokia flip phone. This was like a few months ago, and it lasted about 3 days. It was I couldn't how integrated it was into everything from email to all my group texts that were now blue, that were now green, and everybody was harassing me. And then
yeah.
it was terrible. It's like, well, I wasn't doing my work as well as I as I was previously. I didn't realize how much I used that just for email or Microsoft Teams and stuff like
Hmm.
that on my iPhone, and I was ashamed at how much it was like literally it was like losing a limb. I
Yeah,
was like, this is not fun.
I
So
did. I did not know you did that. I don't think you did tell me
yeah, it
that. A noble
anyway,
experiment. A little
yeah.
startling, but I mean, there's a reason they've become so popular, just cell phones in general or
Hmm.
smartphones, because you can just do so much more. You can also waste more time. So with great power comes great responsibility. I guess is the real lesson, right?
Yeah,
But
yeah.
yeah, that's yeah. So
Also,
that's like I think
yeah.
a great example of one. Just the product is so good that it's impossible to like ever go back to a
Mhm.
time without it, and that might be one of them. Even if it has plenty of negative drawbacks, which we could talk about all day,
Yeah,
it's still a
I mean,
moat.
think about. I mean, all the ones with moats are all the obvious ones, and it sucks that that's the case because they're so expensive. But
Hmm.
and that's not what people want to hear. They want, I want to find the company with a moat that's selling for 3 times earnings or something like
Yeah,
that.
right.
And it's hard to find those in the consumer space because
At the national level, I think maybe in
yeah,
regional, you could probably get
yeah,
some more interesting things there, or smaller countries, or smaller
hmm
markets. You might be able to, but yeah, at the national level, it's going to be difficult to find a
oh yeah,
entrenched moat that's not
they're a
selling high.
local. Yeah, think about like your favorite local fast food thing or something like that. And if it
Maybe not.
decided to,
Maybe yeah, or yeah, just local brands.
yeah, but if it decided to expand, it'd be,
Right.
um,
The
I,
tricky part is a lot of those are privately owned, so it's even
no,
harder
that,
to get.
yeah, they all almost always are. Yeah.
Yeah, depending on how
Um,
large. But there are
yeah.
examples where they're not, and like I said, other countries too potentially could find some.
So somebody said Visa. I think they definitely have a moat, but that it's going to be subject to attack with things like Apple Pay and but I guess that's still tied to Visa, right? So
Is that
it
Apple Pay?
just
I didn't know that. Is it? I
I
don't pay
don't
too.
Apple Pay is my like I have my Visa debit card on where I
Oh,
just yeah, I don't
well, but I think Apple Pay is like they actually take deposits too, don't they? Like you can put cash in like an Apple balance, right? And they're partnered with the bank
I
or
haven't
something.
tried that yet.
I
Yeah,
think you can.
like a prepaid Visa, see, I call it a Visa card, like a prepaid debit card.
Is it? But it's
I don't
serviced through
know. I'm
Apple?
asking you.
Yeah, I
Yeah,
wonder. Yeah, I'm not too
dude.
familiar, but yeah, I see what you're saying though.
I'll tell you another example of a mode is um whenever you describe something by the popular brand name, it
Hmm.
probably like a generic item, like let's say a, a Kleenex or a tissue paper,
Kleenex
right?
is the
Yeah,
common example. I see you've been
Kleenex.
using them today.
Yeah, Coke. Um, where I'm from, some people call all soft drinks Cokes, or so. It's
Really?
great. Yeah,
That's
and
pretty
then
cool. But
and
yeah.
then what's another? Oh, if it's its own verb, like just Google that, like
Hmm.
think about that moat. It's what you type in. Yeah, that's a
It's funny you
crazy.
say that because companies will do everything they possibly can to stop that from like causing them to lose their trademark or whatever. Like because it becomes
Mhm.
so ingrained in just regular language that it's no longer considered the company's. Is kind of how it
Yeah,
works in like trademark intellectual property law. Um, so it's funny that like yeah, that would be the ultimate moat, but then it ends up like kind of destroying it because then anyone's allowed to use the term
yeah.
potentially. But uh, yeah,
I think
Xerox
there's
comes to mind.
cars.
And I know
Yeah,
Xerox,
Xerox.
but well, you don't really talk about the Xerox moat anymore. So even
Like
those are vulnerable.
yeah, and I think some vehicles maybe that like certain models got attributed to everything else that looked just like that.
Mm,
Um, like large SUVs. I remember people just called out like they just called them all Suburbans or something, but it was the only
maybe.
Suburban was the Chevy. I don't just stuff like that. Those are things to look at for moats. I think another moat are people who have this allure of luxury or high status. Think of American Express. That means something to have that card. It's it's like it's heavier. It's it's got this reputation. That thing, like that's
I don't know about
yeah.
that one. I don't know about
Oh,
that one.
it means something in people's mind. If you were at a bar and you go drop that thing down on the table or something, most people
Well,
like
the
think
test.
positively about themselves if they were going to do that.
Well, I think
Like I said,
the test would be, what if they removed half the perks, that the card comes with? Would people still take it? And
yeah,
I would think not, but
yeah, but
maybe.
that's like saying, what if Costco like cut its? I don't. I mean, I
Well,
think the mode is something additional on top of it.
Costco's moat isn't so much Costco name; it's the pricing. Like
Yeah.
it's super low cost, and generally, they do well with the customer service too. But if they double
Hmm.
the price, they're not nearly as interesting anymore.
Yeah.
I would think, because that
We
is their
we
moat.
use yeah, and to your point, well, I'm not a big credit card fan because, like I said before, I'm a Dave Ramsey uh, half follower, let's say. But I do use a Costco credit card because it pretty much pays for the membership, and I priced it against the Amex, and it's better.
Yeah,
So it's not all about. I think moats are easy to identify whenever you can tell that it takes away the rational consumer assumption, which is the worst assumption in all econ. Is that Sally is a rational consumer? Should she? Like that's my lead. That in itself is a terrible assumption. But I think things that exploit that that or that's a good way to identify a moat. Okay, we got some comments about different companies. Do you know ALGN? Do you know who that is?
no, yeah. Someone's asking us about that. I guess they do. They're the Invisalign brand. I
Mm-hmm.
don't know. That's a pretty decent
Are
moat, is
they?
it? Probably have a good trademark around it, but I'm not sure. I remember seeing stuff about like 3D printing, like at home, Invisalign type stuff. Invisalign is like the invisible braces.
Invisalign seems like a pretty good mode if they're if that's one of the ones where I talked about high risk to consumer. People are going to pay up to get their teeth. That they're not going to go with the generic brand whenever it means messed up teeth or is the potential downside. They're going to go with the
They're
with the
$27
top-notch
billion
stuff.
market cap, but let's see.
27 billion.
Yeah,
And what are they selling at?
it's not just Invisalign. It says Invisalign clear aligners, iTero intraoral scanners and services for orthodontists and general practitioner dentists in the U.S.,
Mhm.
Switzerland, China, and internationally. Two segments: clear aligner and imaging systems. So I guess it's call it heavy equipment, and then Invisalign. I'm not sure what
Nice 88 PE. Is that right? Am I reading that right?
yes. Yep,
This
87.7.
this is what happens every time I look up. Anytime I find some business and I'm like, oh, this is a winner, right? I'm like, this is a great company. I'm like, I first go see if they're public, and usually the answer is no, they're private. Then the second thing I do, if they are public, they're usually selling at some ridiculous multiple.
Yeah.
I'll talk about one.
I mean, revenue has grown a lot in the last couple of years, but it actually declined.
But think about what
They're pretty flat
growth
in the
rate
last
you
year.
need to justify an 80 PE. Think about what
You got
growth
to have
rate
some
that,
serious
that
growth.
implies.
I don't know. You could ask our friends at NVIDIA. They're at like a 200 something now or whatever. Or actually, they just had earnings, so it might be lower now, but it's still triple digits at least.
That's crazy.
But yeah, they need a lot of growth from here to justify that.
Yeah.
So
My problem with large PE. I mean, the people watching this are probably in our same camp, so we don't need to go into it. But it's I don't know if Nvidia's market cap dropped in half tomorrow, it would and you owned it, you would say like, oh, it's still. It'd be hard to say, oh, now it's undervalued. You still, I don't know, it's just crazy to me. It would still be overvalued. It's
yeah,
weird.
I think that's probably the toughest part with some of these heavy moat brands. It's like they always look expensive, yet in many cases they kind of grow into it. Maybe that's kind of like the Terry Smith approach, where he buys a lot of seemingly expensive moaty companies, and they end up doing pretty well, at least in the last couple decades.
Is he the three-legged stool guy?
Yes. Right. I think that's him.
It's not Sleep. Somebody's Sleep.
I don't know. I want to say it's Terry Smith, but it might not be. But either way, it's kind of in that same camp of focusing on the business quality much more than that, like just metrics and price. It's mostly on, return on invested capital and business quality first. And it's still looking at price, but not nearly as intensely as maybe some other value types would. Say it is Terry Smith. So thank you, George, for that. So
the three-legged stool. First of all, as a math or person, I love that idea, because the 3 points to define a plane, right? Why we ever put the fourth chair leg? It'll never sit. If you want to define a plane, you only need 3 points. The fourth one can be wherever, right? So the three-legged stool will always be it won't be level, but it will never wobble.
Right.
As long as the surface is a plane, which is a decent assumption. I'm not saying the Earth is flat, but
but the floors are flat.
The floors are flat, not curved. But that's and the three-legged approach. I just remember none of it has valuation in it. It's all, I think it has to do with like a runway and a moat, and I forget what the three are, but I remember listening to it and thinking, man, there's no valuation is nowhere in here. I think it's, can it earn a high return on capital, on incremental capital or something like that. Oh, three-legged stool is Chuck Aker, somebody said.
That's Acre, I think is how you say it. But
Acre. Okay.
Yeah. They're all in the high quality camp, we'll call it.
The Phil Fisher camp, yeah.
So, yeah. Okay, well, I guess I think it's a pretty good spot to wrap up on, unless you have any other comments or thoughts on moats. But there's a lot of different types of moats and ways to look at it. But I think a lot more of our discussion actually went into why moats might not necessarily matter for returns for a certain period of time or for certain size. But I think from a defensive perspective, they tend to be a great thing. Doesn't necessarily mean you have the best returns. You might not have the best returns, but you probably might be able to sustain, you preserve the value you already have a bit better. Maybe that might be the way to look at them. So when you have a lot of money to defend, moats are wonderful. But if you don't, then it might not matter as much, though. I think a moat would always be helpful for a business. Is that kind of a good way to wrap it?
Mm-hmm. Yeah.
All right.
And the best thing would be to have a great moat and a PE of single-digit PE, a great moat. Yeah. But
yeah, that would be nice. If it's a real moat, not a perceived one. But cool. Well, thank you, Patrick. It's always nice chatting with you, and thanks for coming on again. And we'll have to get you on again in the future, maybe for another topic that you suggest, because I did like this one. So please, look forward to seeing you again. And to everyone else, thanks for stopping by. And I've also included Patrick's YouTube channel in the description below, so please check that out if you haven't already. Part-time investing. But with all that said, like, comment, subscribe, all that great stuff. Don't want to miss you next time, so please subscribe and hit that bell icon so you don't miss future episodes. But with that said, until next time.
Thanks for tuning in to Punch Card Investing. The contents of this show should not be used as investment advice or as a recommendation to invest in a particular security. Please consult with a licensed investment advisor if you need investment advice. All investments carry risk and the potential for monetary loss. Thank you, and see you next week.